This is what investors have been waiting for years. Tomorrow, June 12th, SpaceX is scheduled to become a publicly traded company. And before you buy a single share, there are a few things you need to know. Because if you've been scrolling social media, you've probably seen two completely different stories. One side is acting like this thing is guaranteed to go straight to the moon. The other side is acting like it's the most overvalued IPO in history. And honestly, I think both sides are missing the point. Because the most interesting part of this story isn't the rockets. It's not Elon Musk, and it's not even the valuation. The most interesting part is what's happening behind the scenes. Now, before we go any further, quick disclaimer. This video is for educational and entertainment purposes only. Nothing here is financial advice, investment advice, or recommendation to buy or sell any stock. Do your own research and don't rely solely on this video when making investment decisions. All right, let's talk about SpaceX. Because at roughly a $1.77 trillion valuation, we're talking about one of the largest IPOs ever. That's not hype, that's just reality. And when something this big goes public, people immediately start asking one question. Who's buying it? You've probably heard the story. Billions of dollars are about to get forced into SpaceX. Your retirement account is going to own it, whether you want it to or not. The stock is going to explode. Well, not exactly. Because one of the biggest parts of that story changed at the last minute. For months, investors expected the S&P 500 to become a major buyer. The estimates were around $14 billion. Not because investors wanted to buy, because index funds would have to buy. That's how those funds work. If the company gets added, the fund buys it. Simple. Except the S&P looked at SpaceX and basically said, no. The reason? Profitability. SpaceX isn't currently profitable. Last year, the company generated about $18.7 billion in revenue, which sounds incredible, and it is. But it also lost about $4.9 billion. In fact, SpaceX has reportedly lost more than $37 billion since it was founded. So the S&P kept its rules in place and didn't make an exception. And just like that, a huge source of expected buying disappeared. But then the story takes a turn. Because while the S&P was saying no, NASDAQ was saying yes. NASDAQ changed its rules and created a path for SpaceX to enter the NASDAQ 100 roughly 15 trading days after the IPO. And that's important because every ETF that tracks the NASDAQ 100 eventually has to own SpaceX. Not because they love rockets, not because they're fans of Elon, because they literally have to. It's their job. And that's where things get interesting. Because now you've got this weird situation where one major index said no, and another one basically rolled out the red carpet. Now, when people hear that, they immediately think the market is about to go crazy. Billions of dollars buying SpaceX. Billions of dollars selling other stocks. Everything gets disrupted, except when you actually look at the numbers. Not really. The US stock market is worth tens of trillions of dollars. The buying being discussed here is tiny by comparison, and we've actually seen something similar before. When Tesla entered the S&P 500, people were making the exact same arguments. The market survived. Life went on. The broader market barely cared. So if you're worried that SpaceX is about to break the stock market, there's really no evidence pointing that direction. But here's what I think people should be paying attention to. What exactly are you buying? Because if you ask 10 people what SpaceX does, most of them will say rockets. And sure, that's part of it. But that's not really the whole company anymore. Today, SpaceX is basically three major businesses. You've got Starlink, you've got the space business, and you've got AI. Let's start with Starlink. Because Starlink is quietly becoming an absolute monster. Last year, it generated roughly $11.4 billion in revenue and more than $4 billion in profit. That's over 60% of the company's revenue. Think about that. Most people still picture rockets when they hear SpaceX. But Starlink is the business paying the bills. Then you've got the space division, the launches, the reusable rockets, the thing that made SpaceX famous. That segment generated around $4 billion in revenue, but it still lost money. Then there's AI. And last year, AI looked terrible, more than $3 billion in revenue, more than $6 billion in losses. That would normally be a huge red flag, except something happened. Actually, two things happened. Earlier this year, SpaceX announced a contract with Anthropic worth roughly $1.25 billion per month. Then they announced another contract with Google worth roughly $920 million per month. Per month. Not per year. Per month. So suddenly, the division that looked like the biggest problem became one of the biggest reasons investors got excited. And I think that's one of the most important things to understand about this IPO. Investors aren't buying SpaceX because of what it did last year. They're buying SpaceX because of what they think it can become. And that's where valuation enters the conversation. Because at roughly $1.77 trillion, SpaceX is coming public at around 95 times sales. 95. For comparison, Apple, Microsoft, Amazon, and Netflix all entered the public market at dramatically lower valuations relative to revenue. So whether you think SpaceX is worth it or not, this isn't a normal IPO, not even close. Now there's another piece of the puzzle that nobody seems to be talking about. Retail investors. Usually retail investors show up after trading starts. This time it's different. Roughly 30% of the IPO allocation has reportedly been reserved for retail investors. That's a lot. And nobody really knows how this is going to play out. If demand is massive, we could see a lot of competition for shares. If everybody gets all the shares they want before the opening bell, some of that buying pressure disappears. We just don't know yet. And honestly, that's one of the biggest wildcards in this entire story. But the thing I'm watching most isn't tomorrow. It's 6 months from now. The lockup period. Because the IPO itself represents less than 5% of total shares outstanding. Less than 5%. Eventually, roughly 7.5 billion additional shares become eligible for sale. That doesn't mean they all get sold, but it means they can be sold. And historically, that's where a lot of IPOs start running into trouble. We've seen it with Facebook. We've seen it with Robinhood. We've seen it with Coinbase. The excitement comes first. Then reality shows up. Now let's talk about what history suggests. What history suggests? The first hour? Probably chaos, huge volatility, wild price swings, everyone trying to figure out what this thing is actually worth. The first day? Likely driven by emotion, media coverage, momentum traders, FOMO. The first week? The market starts asking whether the excitement matches the valuation. The first 2 weeks? Attention shifts toward NASDAQ inclusion and forced buying discussions. The first month? Historically, this is where some IPOs begin cooling off after the initial excitement. By 12 months, the market usually stops caring about the IPO story and starts caring about the business. Revenue, growth, profitability, execution. And by 18 to 24 months, that's when investors usually have enough information to decide whether the original valuation made sense. At that point, nobody cares about the opening bell anymore. They care about results. So where do I land? Pretty simple. SpaceX is one of the most impressive companies ever built. That's not hype, that's reality. Starlink is real. The AI contracts are real. The growth story is real. The losses are real. The valuation is real. The lockup risk is real. And the NASDAQ inclusion story is real. Those are the facts. And understanding those facts is probably more important than trying to predict what the stock does tomorrow morning. Because the easiest thing in investing is getting excited. The hard part is staying objective. If you enjoyed this video, make sure you subscribe to Investing for Normal People. No hype, no fear, no gurus, just helping normal people understand what's actually happening with their money. Thanks for watching.